but you must appreciate, we've been at about 70 to 100 megawatts for the past 5 years. We are probably the only company which has come out of 5 years of brutality in this sector without a single rupee of haircut. The only other key guy has survived with a 14,000 crore haircut. Now, effectively, if you're going to ramp up from a top line of 500 crores to 5,000 crores in a speed of 12 to 15 months, I think that is massive. It's not that we can press a button and go from 500 to 20,000 crores. If you look at us going to about 1,200 megawatts, that would be a top line of almost 10,000 crores. So looking at a scenario where a company is going from 500 crores to 10,000 crores in 2 years, we do not want to bite more than we can chew. We don't want to take in orders where we take them for the sake of taking them and then fail. We've seen this over the past 12 months as well. A few of our competitors have taken orders and then there have been challenges in their supply chain, in their delivery, in their execution. And I think we want to be extremely conservative. These are very, very large numbers we're talking about. We've also been candid enough to keep upgrading our guidances. And we have said, as we move along the way, as we feel appropriate, we will take on more. So I would leave it at that.
Understood. But where exactly would you say is the bottleneck? Like, are we a bit concerned on the working capital side, or is it just that we are a bit concerned maybe in case of any future changes in terms of regulatory which might come along? Like, exactly is this?
I think the whole challenge lies on execution on the ground. It doesn't lie in working capital. It's a net, we'll be a free cash flow company from this year, significantly free cash flow company. Banking is not a challenge for us. Manufacturing turbines is the least of the challenge. So while you ask me, our manufacturing capacity is 2.5 gigawatts. If we were making caustic soda, if we were making steel, yes, we would be running it at 100% utilization, possibly 110% utilization. Unfortunately, in the wind sector, we have to, whether we are doing turnkey or whether we are doing equipment supply, at the end of the day, someone still needs to execute. And if you look at what's happening in India, the biggest constraint is who will execute wind. There are only 2 wind players in the country today who survive, who do turnkey. And everybody is flocking for turnkey solutions. So the challenge remains, how do you do so much turnkey, multiple lines, ROWs, acquiring land, transmission infrastructure at the same time? If that gets resolved, which is not a piece of cake, to that extent, if people can resolve that and do that, certainly we'll supply more turbines. I mean, if you look at it from 1 year ago to this year, and if you look at our order book, it's now transitioned from virtually 95 or 100% turnkey to virtually 70-30 or maybe 60-40 now with the Hero order. And our stated goal was to be roughly 50-50. So as long as people can execute, we are more than happy to supply turbines to them.
Understood. That helpful. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Pramod Bhutra from Reliance Industry. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes, please go ahead.
Hello, Devan sir. Many congratulations for posting great set of numbers. My query is, do we bid for offshore wind projects?
No, we are not looking at offshore at this point in time. We have access to that. In fact, our 3.3 is capable of being onshore and soft offshore. Our 4X platform is also capable of being onshore and soft offshore. However, as I've said multiple times in the past, and I'll reiterate, the cost of energy in offshore wind is 2.5 times the cost of onshore wind. You don't go offshore just because it sounds sexy to say I'm going offshore. There has to be an economic rationale and reason. In India, we are very well endowed on the onshore front. I mean, looking at whichever study you pick up, from Gerard Hassan to Lawrence Berkeley to Neve, onshore potential ranges from 300 gigawatt right up to 1100 gigawatt. And currently we're at 40 gigawatt. So I think for the next multi-decades, I don't think we need to bother about that. And in a country such as ours, which is very progressive, developing a lot, and it's a great place to be in, it's probably the hottest investment destination in the globe. But the flip side of that also is we're a poor country. Power, 3 rupees, 4 rupees pe chahiye, 2 rupees pe chahiye. No one is going to buy power at 7-8 rupees. So barring demonstration projects, showing technological progress, I see no reason for offshore to take off.
Understood, sir. Thank you very much, sir. Thanks.
Thank you.
Thank you. The next question is from the line of Dhananjay Bhagrodia from ASK. Please go ahead.
Hi, sir. You mentioned that you're the only player who hasn't taken a haircut and has managed to survive in a competitive industry like this. Could you give us specific reasons why? Because we've always looked at this as more as a, let's say, a competitive, commoditized industry. What have you all done so differently?
It's the management philosophy. People operate at 3% margins, 4% margins historically. People operated with 6,000, 8,000 debt. I frankly don't know. I can't answer about them, but all I can say across the Inox GFL group companies, we are profit leaders in whichever segment we operated. We are very, very conscious of the capital we spend. Simple point in place. Our entire capex on this 2.5 gigawatt of manufacturing capacity was close to 600 to 700 crores. Competitors would have spent close to 3,000 crores. So I'm not sure where it goes, what they do wrong. All I can say is we are very conscious about capital spends. We are very conscious about costs, and that's probably the only reason why we survived. While we had to pump in 700-800 crores from the promoter family to survive, we did have 5, 8, 10, 15,000 crores of debt. Had we had that, we would have been an NCLT as well.
Okay. And going ahead, let's say now we are left with two players, us and another player. What would you say is going to be, let's say, our win rate, or is that too tough to give a call in terms of how bidding goes and stuff like that? Would that be something where...
So look, I don't think you can do that. I think it's as simple as that. The longest lead time you get to execute a project is 24 months.
Okay.
PSUs give you 24 months. IPPs give you 12 to 18 months. Retail gives you about 3 to 6 months. So today, if we put out 800 and 1200 as guidances in the public domain, and our order book is 2700 odd megawatt, we're anyway sold out for the next 2.5 years. So it's no longer a question of him winning, me winning, who winning. We have taken as much as we want. I mean, yes, if we wanted to do more, we'll take more, but I think we are chock-a-block with respect to the next 2 years.
Sure. And would it be safe to say that these are at the margins which would be comfortable to you, and we see that, let's say, this bottoming out and there could be scope for margin improvement from here?
Look, we've guided for 14 to 15%, and I'll stick to that. Yes, there could be scope to improve further. There could be scope to go down 1%, but I think keeping all those thoughts in mind, currently we are guiding for 14 to 15%. As we move along the way, if we have guidances, new products come in, etc., we may have this.
Okay. And just last question, and the working capital is something we're confident on would be in this range and not deteriorate from here, right?
Working capital, guiding for 90 days.
Yeah. So for working capital, we are guiding for 90 days. Though our net working capital eventually will be 45 days, but on a conservative basis to all our investors, we are guiding for 90 days of working capital cycle.
Okay. So fantastic. I think then at least the next 1.5 years, everything seems to be placed. And lastly, would there be any risk which we could then, because see, 1.5 years we're secured for. So any other risk which we might...
Can you repeat?
So I'm saying next 1.5 years, we are secure on orders and margins and working capital also looks good. Is there any risks which could be there which we've not mentioned?
I think, let's put it like this. We've got all the building blocks in place when you look at our presentation. We've got a strong balance sheet. We've got a lot of orders. We've rejigged the management team. We have our supply chain in place. So frankly speaking, after 5 years of hell, there has to be, the sun has to, kabhi to suraj bhi ugega na. Now it's our time. So let the next decade be our time. There are normal business risks which are part and parcel of any business. Quarter here and there, percentage here and there, receivables 30 days here and there, which is part and parcel of this business. Nothing out of the ordinary.
Yeah. Perfect. Great. Thank you so much.
Thank you.
Thank you. The next question is from the line of Siddhant K. from Tusk Investment. Please go ahead.
Yeah, hello.
Yes, sir, you're audible.
Yeah. I just wanted one clarification. So on a blended basis, the revenue net of taxes per megawatt, what should be the benchmark?
So net of tax, 6 crore rupees number which Mr. Devansh has said is on a gross basis. So broadly on a net basis, you need to divide this by 1.15. So broadly net of taxes and revenue per megawatt will be somewhere around 5.24 crore rupees.
5.2. Okay. This time it's coming around 4.2 for the standalone number. So, any reason for the...
So as explained, this 5.2 crore rupees comprises of nacelle, blade, tower and the, EPC components. But, there will be always a quarter-to-quarter variation in this number.
Okay.
Might be in some quarter you will see the higher number. But on a yearly basis, in a normalized year, which would be FY25, this number will come.
Okay. That's it. Thank you so much.
Thank you. The next question is from the line of Vishal Gupta from Emoj Capital. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah, all of my question has been answered. Just to understand, do we see any other exceptional item coming in FY25 like we have seen for the Q4?
Yeah, how will anybody know whether an exceptional item will come?
So,
how can you know that today?
Is there anything left for...
I think what we've done as a company is keep operations straightforward. I think you would have, you could have exceptional gains, you could have exceptional, that's how we see it. I think we've been very conservative in terms of the balance sheet approach, in terms of provisions, and I think to that extent, it's impossible to predict exceptional items, but I don't see anything fundamentally changing from here on.
Okay. That's from my end. Thank you.
Thank you. The next question is from the line of Abhishek Dutt from Anand Rathi. Please go ahead.
Hello.
Yes,
hello.
you're audible.
I just wanted to know, in note number 16B, it mentions about we have transmission capacity of 1.9 gigawatt in two states of Gujarat and Rajasthan. What exactly is this? Does this refer to, if you can explain?
So what this means is basically all the wind capacity we've set up today, and if you look at that note, it says particularly currently Gujarat and Rajasthan, hybrid policies have come out, which enable us to use the common infrastructure to the extent of 50% more capacity. So on the existing infra, which has been fully utilized and spent out, we are now allowed to load 50% more power. And we are developing hybrid across multiple customers, and multiple customers want us to give them the connectivity. So while we don't do solar EPC and we don't provide for that, many of the customers are coming to load onto these transmission lines. And to that extent, we have almost a gigawatt worth of capacity which has been created, which will be sold out. And that's the reason for the reinstatement in intangible assets.
Okay. And when you talk about this intangible, land bank of 5 gigawatts, so this is the total capacity or this is the incremental opportunity which is there?
This is the incremental opportunity.
And this is the capacity in Rajasthan and Gujarat basically.
No, I'm talking about the overall.
The 5 gigawatt is the incremental capacity. The 1.9 is the already operational utilized capacity on which now we can add approximately 50% more thanks to the hybrid policies in these two states. Will be an opportunity for future projects as well.
And what was the capex for the year, and what do you expect it for FY25 and 26?
We've guided capex going forward will be about 50 to 75 crores for the new modes which we keep getting. Other than that, we don't need any capex. I think for the current year as well, we would have been close to about 50 to 70 crores.
Yeah.
And this in the cash flow statement, it shows capex of around 750 crores, including
it is for the common infrastructure which we have built on a various sites, right? So basically this we will derive from the customer. So as per the Ind AS that need to be capitalized, but that is not an optical capex which the company incurs. So basically, that will be realized over a period of time, and on one side you will see the fixed asset, on the other side you will see the liability over a period of time. So the optical capex for production or for running our operations are around 50 to 70 crores.
And this will be to, change the molds and all.
Yes, change of molds or change of, requires anything for the 3 megawatt thing.
And this Hero project will also be, is it a equipment contract or is it a C2C contract?
No, it is mainly equipment supply, but along with some value-added services.
And this will be executed over what time frame?
This to be executed over next probably 15 to 18 months.
Oh, thank you so much. That's it.
Thank you. The next question is from the line of Preet Nagreshat from Wealth Finvisor. Please go ahead.
Yes, sir. So I want to understand how we set up for the 3 megawatt execution. The question by asking this, what I'm trying to understand is our level of readiness, the molds that need to be in place. Does it mean that from Q1 onwards, we should be able to have a more execution than what we've executed in Q4? Could someone share some light on this?
Yeah. So obviously, the Q4 quarter was the one in which we ramped up the 3 megawatt production. Going ahead, as we've stated multiple times, 800 megawatt is the execution target for FY25. Now, naturally, the ramp up is going on. So Q1, Q2, Q3, Q4, you will be seeing gradually more execution. But FY25, we've completely transitioned to the 3 megawatt product. And out of the 800 megawatt, it will be majorly the 3 megawatt turbines which will be executing. So obviously, over Q4, you will see gradual ramp up in our execution.
Okay. This question here was that being net debt free by the first half. But if I look at the kind of EBITDA and the kind of margins and the cash flow that could potentially come from next year, at the end of the first half, how are you planning to see 600 crore plus money being generated, including say depreciation, that you could utilize to pay off the debt? Or is there some plan
for being net debt free by H1? And I think we have multiple options in front of us as a company. We look at that as we keep moving forward. I don't think we'll be able to shed more light on that at this point in time. But yes, operationally over the course of the full financial year, with an 800 megawatt execution, I think there should be much larger free cash flow than the 600 crores which we need to pay down debt.
Right. So what I was trying to get to, Devansh, is that are there some kind of additional stake sale being planned, or it's going to be fully
impossible to answer at this point in time. All the options are open in front of us. I think the balance sheet is very, very strong. We've come down from about 3,000 odd crores of interest-bearing debt and advances now to about 600 odd crores. So frankly speaking, we're going to be net debt free in H1, and I think we're confident. We have multiple strategies in play. We have our O&M company in play. We have multiple options. We have multiple things being discussed at the board level and also at the operating level. But all I can say is operationally itself, our free cash flows in the manufacturing business will be much larger than the 600 odd which we carry on the books. I won't be able to share more than that at this point in time.
Got you. Okay. Perfect. Great. Thank you. That's it from me.
Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question for the day. We would now like to conclude this conference. On the behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.